Hello friends, welcome back to part 15 of my Tesla earnings forecast video review series. I am joined as always by my co-host, Loki, who seems very interested in eating his breakfast if I will just play along with him some. There you go, buddy. You wanna eat some kibbles? Well, I thought he was. He's up. He's up and moving around. Alright, so I'll lower the Loki cam height here in case he walks over. And raise up so he stays in the frame a little bit. Okay, that's probably a pretty good angle on Loki for the Loki's bed cam. He's playing hard to get today, I think. He may not eat his breakfast. We'll see what happens. There he comes. Hello, buddy. Hello, buddy. What are you doing? Hi. Oh, right into your living room. There's Loki. Hey, buddy. You gonna eat some food? You're just gonna keep backing up into your bed? Wow, I may not even be able to get to any content today if Loki keeps being a weird dog. Just pacing back and forth. Go ahead and eat your food, buddy. Eat your food, you silly dog. Alright, so, yes, good boy. Alright, so while he's eating, I will share my screen and close out of this one and scroll on down to the next tweet that we want to talk about from my 69 tweet thread that I sent out on May 7th. Oh, Loki has laid back down again. Buddy. Don't you want to eat more breakfast? I don't know if he does. Alright, so that drama will continue. Yes. Good boy. Good boy, Crunchity. You want another one? Yes. There you go. Yes. Good boy. Alright, so this one is not a difficult one to explain. So maybe this is a good video for me to just show Loki eating breakfast and just have me, there's my dryer going off again. Sorry about the buzzing noise in the background, if you can hear it. Sometimes the audio will filter out the buzzing sound, I don't know. Here's the most straightforward chart in my forecast thread. Tesla used to lose money, not anymore. I didn't have to write a lot more about this. This is a very stark comparison. If you just look at every year's EPS from Tesla. So the non-GAAP EPS is the one the Wall Street analysts care about because companies don't have to raise money to issue stock-based compensation. That's really the crux of it. Companies don't get into cash problems where they need to borrow so that they can pay stock-based compensation. So analysts throw that out. Warren Buffett and Charlie Munger will tell you that you absolutely need to count stock-based compensation as an expense. And every company does in their GAAP income statement that they release because the GAAP rules require you to. But they are not in favor of throwing out the stock-based compensation. But this is the non-GAAP EPS excluding stock-based compensation. You can see the tiny, thin sliver of EPS back here in 2019. That might have been 1 penny or 2 pennies worth of earnings, something like that. Which, hey, is better than a negative number, which is what Tesla reported back here in 2018. Even that number wasn't a loss of $1, right? That was a loss of, what's that look like, 10 cents or something? So yeah, 2020 was a lot better than that. Not quite $1, but close. 2021 was way better, so more than double the EPS to over $2. And then last year, 2022, Tesla was up over $4. Now, some people think that in 2023, Tesla's EPS is going to decline. Yeah, I'm not kidding. Some people are looking at this trend and they're saying, well, that was the peak in 2022. It's all downhill from here. Tesla's never going to make $4 worth of earnings per share again. And those people are what I like to call wrong. Tesla's going to report more EPS every year than they did the year before. That is what I'm forecasting. Could I be wrong about that? I suppose I could, but it would take something pretty unexpected for Tesla to not produce more earnings this year, given that they're going to be selling so many more vehicles this year than they sold last year. And those economies of scale ought to be flowing through to more bottom line profit, provided that the price cuts don't have a severely bad impact at the bottom line. So that's that chart. Do I want to try to squeeze in one more chart? Sure. This is the last one in the thread. With just fascinating tables of numbers from here, Tesla's operating cash flow and free cash flow have trended steadily up and to the right until they began ending the wave, which has an unfavorable one-time impact on working capital. So what are we seeing here? Well, the free cash flow is in the light white color here. So you can see Tesla had negative free cash flow over the 12 trailing months ended Q3 2018. So that would have been Q4 2017 plus Q1, Q2, and Q3 of 2018. But then by Q4, so full year 2018, the free cash flow was almost zero. And then from that point forward, Tesla's 12 trailing month free cash flow has been positive the whole time. So Elon has remarked multiple times that prototypes are easy, production is hard, and producing sustainable positive free cash flow is excruciating. It's extremely difficult to get your company free cash flow positive, and sometimes companies that are very confident they're going to achieve positive free cash flow will wait until they have to go public, because the valuation placed on an IPO is much higher if the company is already free cash flow positive, as opposed to in the hole, still trying to grow enough to get free cash flow positive, still trying to right size their cost base and their cost structure relative to the business and their growth strategy, right? So what's the other line? The other line is the capital spending. So capital spending net of free cash flow is operating cash flow. So if you subtract this bar from this gray bar, you'll see how much operating cash flow there was, right? So these gray bars, you can see over time, are getting bigger, more and more capital spending. But the free cash flow is also growing over time, more and more free cash flow. So the sum of these two, you add the two together, the height of this bar is the total operating cash flows, and then you subtract the capital spending from that, and that leaves you with the free cash flow. How much money do you have left over after spending some of your operating cash flow on capital spending, project capital, direct purchase capital, plant, property, equipment, those sorts of things that you've placed into service as assets on your balance sheet. So Tesla's still doing a lot of investing, but they're not going crazy. They're not going nuts with the capital spending. It's about $8 billion per year on a 12 trailing month basis, which is pretty good. And lots of free cash flow left over. The trend these past 2 quarters hasn't been that great, but Tesla has been lowering prices some in Q4 and in Q1. There was that promotion in the US at the end of Q4 that gave people $7,500 off the purchase of their Tesla in December. So that started this, and then the price cuts in Q1. Now we've seen some price increases from Tesla here in Q2 2023, so we'll find out in mid-July what the net impact of Tesla's pricing moves was on Q2. And that's my video for today. So, checking back in with Loki over here. He has decided he would rather curl up in bed than eat his breakfast. I'll just set this camera. Oh, why can't I get a good grip on this tripod? Right back where I found it. And with that, I will say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel and click the notification bell to be alerted whenever I post fresh content. Thank you to everyone who supports me, either on Patreon or on Twitter for 69 cents a week, where you get access to exclusive subscriber-only tweets, and those are mostly for fun. I'm still sharing all my charts and forecasts and stuff publicly. And you get early access to these videos the day I upload them, instead of having to wait for me to make them public, one video per day. And those who supported me by joining my YouTube channel, especially my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.